Now, we can move on directly to the money management techniques applicable to the multi-time frame trading strategy, and choose the one that suits you best. The first method of money management is conservative. In accordance with the rules of this method, trader risks only a small portion of his initial capital in each transaction, ranging from 1 to 5%. In addition, the maximum number of open positions in the portfolio of the trader should not be more than 3. Suppose a trader has opened a real trading account and funded it with $4,000. So, according to the rules of the conservative approach of money management, the financial risk of the trader in one single transaction would be limited by $120. In accordance with the rules of the multi-time frame trading strategy, the size of the stop loss set by the trader to limit his losses will vary from 1 to 1.25 ADV, depending on the market situation. So, knowing the size of the stop loss in points and the amount of risk in dollars, trader will be able to determine the size of the transaction in lots or units. Take a look at the first example. Operating by the rules of the conservative money management method, low volatile and medium volatile instruments of the Forex market will cap the leverage of the trader by 3 to 1 for every single position in his portfolio. The next slide is an example showing the relevant calculations for another financial instrument, WTI crude oil. As you can see, operating by the rules of the conservative money management method, the leverage used by the trader does not exceed 10 to 1. Now, let's talk a little about the performance parameters of the multi-time frame trading strategy. As you already know, in the framework of the proprietary method of trading a portfolio, consisting of several trading strategies, the medium-term multi-time frame trading strategy, as well as the long-term strategy weekly envelope, is used to determine the direction and the likelihood of the positive outcome of the transactions made by the rules of the full version of the short-term trading strategy double-barrel gun. Despite this fact, the multi-time frame trading strategy, as well as other strategies included in the portfolio, is self-sufficient and can be used separately for the purpose of medium-term trading. In confirmation of this fact, I would like to show you some specific figures. The statistics on the main indicators of the effectiveness of this strategy looks quite decent. I will say about this a few minutes later, but first, let's return to the question of probability of the trading strategy's failure. In order to ensure that his trading is comfortable enough, every trader has to understand what profit-loss ratio and what percentage of profitable trades in a series can provide him a high reliability of trading results and a low likelihood of the strategy's failure. As I explained earlier in the series of videos about the double-barrel gun trading strategy, for the short-term strategy, it is more important to ensure a high winning percentage in the series of trades, in contrast to the long-term strategy, where a favorable profit-loss ratio plays more important role. The question is, what parameters readings should be in the case of the medium-term trading strategy, in order to ensure good performance of the strategy? Based on the matrix of probabilities of the trading strategy's failure, we can draw the following conclusion. In order to ensure the stability and sustainability of trade results of the multi-time frame trading strategy, the profit-loss ratio parameter should be in the range from 1.5 to 1 to 2 to 1 or higher. In this case, even if the share of the winning transactions in the series declines to 50%, the probability of the strategy's failure would be no more than 2%. On the slide below, I bring to your attention the statistics collected during backtesting of the multi-time frame trading strategy on historical data. Here's how the yield curve looks like when using the method of money management described above. On this diagram, you can see the statistics covering 2 years period, starting from January 2014 till December 2015. This series covers the transactions with the euro versus US dollar, the currency pair which is the most liquid and most popular among traders. For the purpose of backtesting, the initial amount of trading capital was set at $3,000. During this period, there were 72 transactions, executed in accordance with the rules of the multi-timeframe trading strategy. As you can see, the positive returns were received during backtesting. If we talk about specific figures, the key performance indicators of the multi-timeframe trading strategy are as follows. The total return of trading operations had reached 126%. The maximum drawdown had not exceeded 6%. The share of winning trades in the series had reached 72%. Now I would like to say a few words about the aggressive method of money management. As you already know, the conservative approach to the management of the position size suggests opening a position with the calculated amount immediately after the formal signal is generated, and moving a stop-loss order to the break-even point immediately after the price reaches the target number 1. In the case of the aggressive money management approach, the task of the trader is to ensure a comparable or even better performance of the strategy by increasing the share of winning trades in a series while improving the profit-loss ratio at the same time. Obviously, in order to improve the profit-loss ratio, trader must either reduce the size of the stop-loss or increase the size of the take-profit, or do both at the same time. On the other hand, the probability of the positive outcome of the transaction can be increased if there is a confirmation of the trading signal from other strategies included in the portfolio of the trader. Let's take a look at both options. In my opinion, it is logical to open a position in the case when the signals generated by several different strategies do not contradict each other and appear approximately at the same time. The most optimal situation in this sense is the following one. Suppose that in accordance with the rules of the long-term trading strategy weekly envelope, the market has started a downtrend. At the same time, after generating a formal signal for opening a short position according to the rules of the multi-timeframe trading strategy, the market price starts to retrace upward, but does not reach the stop-loss level. Then, the downward movement resumes, and after a while the short-term double-barrel gun strategy also generates a signal for opening a short position. An example of such situation is provided on the slide below, in the diagram on the left. In this situation, a short position can be opened by the rules of the multi-timeframe trading strategy, with a somewhat lower risk, and a somewhat larger trading lot. This is especially true in the case where a trader has missed the original signal for opening a position, or did not open a position immediately after the formation of the initial signal, because of the large size of the stop-loss. This approach to position size management is more aggressive, but more efficient at the same time. It is recommended to more experienced traders, with the particular attention paid to the leverage. The next slide shows the relevant calculations of the parameters of the trade executed in the framework of an aggressive method of money management. As you can see, due to reduction of the size of the stop-loss in points, trader improves the profit-loss ratio and also gets an opportunity to operate with larger lot. The next slide is an example showing the relevant calculations for another financial instrument. Gold versus US dollar. Also, it must be noted that in the case of opening 2 or 3 positions, trader must pay special attention to the leverage, which ideally should not exceed 15:1. At the end of this video course, I need to mention one important point. It's up to you to make a decision whether to use the multi-timeframe trading strategy in the real market or not. However, I would like you to remember that all information contained in this video course is used for educational purposes only, and cannot be a guarantee of success. If you decide to trade by the rules of this strategy, then, here's my advice to you. Before you start trading on a real account, please try to trade some time on a demo account first. Make sure that you properly understand and easily follow all the rules of the strategy. Only then you will understand whether this trading strategy fits you or not. Now it's time to complete my video presentation. I want to thank you for your attention and wish you all best in trading. Hope to see you again very soon in my next series of video. Good luck.